5 a.m. in New York City. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. Amazing summit. President Trump hails the meeting with President Xi Jinping that's resulted now in a détente, apparently, and a pause on rare earth restrictions. Far from certain. Fed Chair Powell says a December cut is in no way a foregone conclusion. Yesterday's cut saw two dissents, opposition to the decision on both sides. And Amazon and Apple earnings on deck after the market close as investors digest results this morning from Alphabet, Meta and Microsoft. So we finished the day yesterday with the S&P unchanged, the Nasdaq 100 up 0.4%, but to some extent it's a little irrelevant today with everything that the market has to digest. Now we did get that rate cut from the Fed chair, but also an amber light on December. So it remains to be seen how the market, in particular the bond market, reflects that. This morning you can see we were pointed green, particularly for Russell 2000 futures. We did get that cut. We also got a massive amount of spending from three of the big tech companies in different parts of the market. We have Ed Yardeni saying that perhaps the Fed didn't want to add to these animal spirits, and he would agree with that impetus if that's what some of the impetus was from the Fed Chair Jay Powell, but also questions out there as to just how much of a consensus there is on this Federal Reserve. So as you can see, the two-year yield pretty much unchanged, 3.58. The 10-year yield right up to 4.06, and the 30-year yield at 4.62. So we are getting that steepening again, particularly at the shorter end of the curve. We'll get into all of that this hour, but let's get to some individual movers now with Kriti Gupta. Kriti.
Good morning, Vonnie. We are, of course, deep in tech earnings season, as you suggested. The winner so far is Alphabet. Shares higher by 7.5% this morning. This is a really big beat when it comes to their cloud business. Remember, Google, Alphabet, is the third largest player after AWS and Microsoft's Azure. So really getting some of that market momentum is a big, big win for Alphabet's bottom line, especially when this is a stock that's usually quite correlated with marketing budget and ad spend. So it looks like investors really rewarding it for that kind of pivot. On the other hand, when you keep sticking with the tech picture, Meta not having such a great day. Remember, we've seen this movie before where they talk about going big on a new theme. They used to talk about the metaverse. Now they're talking about AI. The market isn't believing that they can really come and deliver when it comes to that massive capex spend, down about 7.5% for those Meta shares. We should end with the favorite, maybe not having such a good day, Chipotle. A similar theme. Yesterday I was here talking about how no one's buying Oreos for Mondelez anymore. It's a similar story for Chipotle. Those shares are down 18%. The CEO saying people just aren't spending as they start to feel the pinch, and that's really reflecting in their bottom line, Bonnie.
Yeah, cutting the full-year outlook for a third time, it is very concerning. Kriti, thank you so much. Kriti Gupta. And coming up this hour, Marieke Blom of ING discusses the Dutch election and a closer look at the Fed and the BOJ rate decisions with Rabobank's Jane Foley later this hour. Well, after days of build-up, President Trump meets with President Xi.
I thought it was an amazing meeting. He's a great leader of a very powerful, very strong country, China, and what can I say? We have, it was an outstanding group of decisions, I think, that was made. A lot of decisions were made, too. There wasn't too much left out there. And we've come to conclusion on many very important points.
And President Xi echoing the sentiment.
This development goes hand in hand with your vision to make America great again. Our two countries are fully able to help each other succeed and prosper together.
Witnessing détente in action there, well, China has now officially confirmed it has reached a one-year truce on tariffs, on rare earths in particular. Joining us now from Busan, South Korea, where the meeting took place, is Bloomberg's Stephen Engel. So, Stephen, a raft of superlatives. The president telling reporters, I guess on the scale from 0 to 10, I would say the meeting was a 12. And an outstanding group of decisions we just heard. So what are the deliverables?
Yeah, so they didn't necessarily talk about or deliver all the items that Donald Trump sort of telegraphed yesterday when he was sort of previewing this highly anticipated summit with Xi Jinping, which lasted about an hour and 40 minutes this early afternoon, or late morning it actually was, 11 o'clock to about 12:30 or so local time. They did reach agreement on the rollback of reciprocal tariffs that they both have been adding to each other. in reciprocal manner since Liberation Day, including the biggest lever that China really found it had, and that was on critical minerals and rare earths and magnets, key critical components to America's supply chain, also Europe's supply chain in the automobile industry. So China, and we got a confirmation as well through officials in Beijing after that meeting was finished, that Beijing will put a pause on its more tightened export controls on those critical rare earths for at least a year. The United States also has agreed to roll back some of their export controls in a truce for about a year. There was a victory as well on soybeans. Donald Trump saying China has pledged to buy a tremendous amount of soybeans. It might be a little bit late in the harvest now, but it looks as though China already is going to be ramping up their purchases of soybeans. And again, there was other issues that could be seen as a deliverable. TikTok wasn't necessarily discussed, but later Beijing officials say they're going to be working very closely with U.S. officials to find an equitable solution to the TikTok sale. Again, the sticking issues are going to be on the data, about the ownership structure, and the algorithms, Bonnie.
Yeah, so Stephen, a lot of positive words like cooperation on trade out of China as well. And invitations. So the president saying he's looking forward to visiting China, and he invited the premier to the White House. Now, it's important that this good feeling continues until at least the next meeting, right? What can we expect in terms of when a next meeting might take place?
Yeah, that's right. So both leaders have invited the other to each other's country. Donald Trump saying that he has been invited to come to China. I think the dates they're talking about now perhaps are going to be in April. So yes, that's the next date on the calendar we need to circle to see how they can take some of these agreements that were initiated in that framework agreement in Kuala Lumpur and then more solidified through that goodwill that they saw across the table today. Can they propel that further? Because really the foundational issues of competitive adversaries, if you will, are still there. So they need to be resolved. Now, one issue, obviously, that the Chinese would have liked to have seen resolution or at least a movement on, and that is access to the more advanced AI accelerators. And Donald Trump yesterday talked about we might allow the top-level NVIDIA Blackwell chips to be sold into China. We could lift that restrictions. He was alluding to the possible bargaining chip. But again, he said that was not brought up. The Blackwell chips. They did talk about other products from NVIDIA. I assume it's the H20, the more watered down version that China itself has decided is a national security threat, and they blocked it from coming into China. So there's still a lot of room to go on those American export controls of the most advanced chips.
Stephen, thank you so much. That is Bloomberg's Stephen Engel there for us all week. Turning to tech now, shares of Meta and Microsoft extending post-earnings declines as both companies are continuing to spend big on AI. Meanwhile, Alphabet is rising after a surge in demand for its cloud services. Let's bring in Matt Blom of Bloomberg Intelligence for more. So that's the story right there, Matt, right? A company that can depend on clients for revenue gets rewarded, and companies that are just spending, AI spending gone wild, literally up 89% among all three companies from last year, getting punished. I mean, should we be getting more nervous?
I don't know whether more nervous, but certainly I think the nerves are definitely still there. And, I don't think the question marks about an AI bubble are going away anytime soon. I think there's a bit of nuance between each of the companies. As you say, revenue actually did better to the upside across all three, but certainly it was much stronger than expected for Google, and particularly in their cloud business, growing 34% year on year and signing a lot of billion-dollar-plus deals. So I think there's confidence that their momentum to close the gap, they're the number 3 in cloud behind Microsoft and Amazon. That momentum is improving. I think at the other end, you've got Meta, where revenues are a bit better, but not massively better, and perhaps some slightly cavalier commentary from Mark Zuckerberg about spending more money, and that's not so bad if we spend more rather than less. There'll be ways to figure out how to get some kind of return on that investment sometime in the future. So I think definitely spooking investors a bit. And in the middle, you've got Microsoft, where a better than expected revenue growth, but they still aren't spending enough to unlock fully the demand that's there. So I think a bit of frustration there from investors that they're leaving customer demand on the table that's perhaps getting sucked up by the likes of Google, and that even to kind of close that gap, the capex having to spend is more than expected. So they spent $35 billion of capex in the quarter. The market was looking for 30. So yeah, nuances across all three of them.
On the calls, all of the leaders really trying to out-rhetoric each other, if you like. Zuckerberg talking about the right strategy to aggressively front-load building capacity. Sundar Pichai, in fact, also speaking, in massive terms. But Satya Nadella said that Microsoft is building planet-scale cloud infrastructure. It all seems a little ludicrous when Zuckerberg also said that the three avenues for money-making are basically advertising, commerce, and subscriptions. I mean, can we depend on AI to bring in that much revenue?
So it's a good question. I think if it can, then it's almost like a kind of transition. That big advertising market exists, that big subscription market exists. So there's like rivalry between the existing players and the likes of Meta. Obviously, Meta's also looking to get into the advertising agency space with their own AI tools. So there's obviously a WPP report today with weak earnings down quite significantly. And so that whole industry is potentially at risk from these new technologies. So there's a lot of different industry sectors that are kind of bumping up against each other right now and creating friction.
So slightly different types of companies, but Apple and Amazon to report later. What should we be looking for immediately, Matt?
Yeah, Apple, I think the focus is really on iPhone 17 and whether it's really living up to these kind of expectations that it's getting strong demand from customers, not just in the developed world, but in China too. So that's the big focus there. Amazon, again, will be very similar about the cloud momentum and whether they're starting to lose share to the likes of Google and how much more they're going to spend to kind of maintain the capacity growth. Obviously, we get with Amazon a look into the real economy with their retail online business. They're also cutting costs, and there's a big question mark about how much of that headcount reduction is linked directly to AI or whether it's just an overhang from the pandemic where they seem to overhire.
Matt, thank you so much. Matt Bloxham there of Bloomberg Intelligence. Now to other top stories trending on the terminal this morning. Novo Nordisk has made a higher offer for obesity startup Metsera to consolidate its position in weight loss medications. Sources telling Bloomberg that Novo, which had earlier made a takeover proposal for Metsera before the US company reached a deal with Pfizer, has come back with another offer with an improved value and structure. Stellantis expects one-time charges in the second half of the year as political, economic and regulatory pressures force the automaker into making strategic changes. The warning clouded an otherwise positive third quarter, with Stellantis reporting a 13% jump in net revenues. UK Chancellor Rachel Reeves has apologised for renting out her family home without a licence after entering office last year. Reeves wrote to Prime Minister Starmer on Wednesday to say that she had not obtained a permission that she had newly understood to have been required for her property in South London. Starmer's independent advisor told the Premier that further investigation is not necessary. Coming up, we discuss that rate decision and also the BOJ rate decision and the results of the Dutch election with Marieke Blom of ING Research. That's next. This is Bloomberg.
We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
Dissent among FOMC members continues, with officials on both ends of the policy spectrum opposing the quarter-point cut. Investors now turn to Italy, where the European Central Bank is expected to leave rates unchanged. Joining us now is Bloomberg's Oliver Crook with a special guest, ING Chief Economist Marieke Blom. Ollie.
Yeah, that's right. So listen, we talk about fragmentation in politics. That's certainly what we've seen in the Netherlands. We've also talked about fragmentation at the FOMC board of the Federal Reserve. And that's where I'd like to begin with our next guest, who's the chief economist and head of research at ING. Just beginning, before we get into the sort of domestic story here and what we've seen in the election, what you made of what we heard from the Federal Reserve last night and the sort of trickle through we're going to see into Europe.
Yeah, well, no big surprises there, right? With a 25 basis point cut, we'd say, okay, that's fully explicable by housing rents coming down, by energy prices being lower, and of course you see the labor market weakening significantly, so also less pressure from wages. And in that sense, that's not really a surprise, nor is it specifically concerning. That's not the first thing we're watching.
And what were we watching here now? We have a new government, we have a new election, we don't yet have the government. There's going to be potentially protracted negotiations. What is your expectation? What does the market want to see from this new government?
Yeah, well, what everyone would love to see is a stable government which will govern for the next 4 years, which will set a direction, which businesses can take into account when they're making their business decisions. That's not what we've seen over the last couple of years. We've seen sort of like zigzagging governments from one end to the other, but also voters, right? So it's a very fragmented political landscape, and that's why it's very difficult for those parties to make compromises, to form a coalition, which is of course a big concern from the business community.
And something that potentially didn't play as much in the domestic story, but I think for the global audience and certainly for the European audience, is going to be the Netherlands' role within the European Union. We're expecting a more constructive relationship with the EU. What does a more constructive relationship look like, and how significant is it if the Netherlands is now ready to get on board with joint debt at the European level?
So this is a very significant shift in what voters have voted for. So the parties they voted for are definitely way more pro-European than what they voted for previously. And also a coalition that we saw over the last period was very Euro-critical, so to speak. So what do we expect from that? I think it's supportive that they're part of political families. So the largest parties, which are likely to form a coalition at some point, are part of political families, which is important to basically, the tech sector is very important for the Netherlands, and that way they can protect the Dutch tech sector as a European treasure, basically, together. I think that's one important thing. The second thing is the stance on Eurobonds, on common debt. I don't expect sort of like any sort of real debt sharing to happen, but for new projects, like with defense spending, what we've seen before, but maybe for infrastructure, for additional spending, I think it would be something that this coalition could consider, but it would always be gradual, conditional, basically making sure that moral hazard is as low as it can be.
Which is significant. I mean, 5 years ago, you ask about, I think, much of this political landscape here, they say no way, and you've seen certainly an evolution on that. But I want to talk a little bit more about the tech sector that you've just highlighted there. We've seen some pretty spectacular moves out of the Dutch government, taking control of Nexperia. Obviously, ASML, the sort of crown jewel of the business community within the Netherlands, is certainly stuck between China and the United States. How do you see that playing out, and how much of a risk is that to the Dutch economy?
So the tech sector is of vital importance to the Dutch economy, and of course from a geopolitical perspective to the European economy, to European strength. And in that sense, I think it's something important for a new government to fully sort of like embrace, take a stance on, which I expect that they will be doing, and liaising also with other European nations on how to determine their stance. Because so far, it's been, relatively speaking, it's the Netherlands that has this strong tech sector. It hasn't really been seen as part of a bigger European play. And that's what I mostly expect from a new government, that they will do it more in European cooperation.
And how concerned are you about a bubble within AI, within technology, and how susceptible is the Dutch economy to that?
Well, I think mostly from the indirect effects in the US. So if we would see that bubble burst, the wealth effect in the US, the infrastructure spending effects in the US, that could have an effect also indirectly via the financial markets on Europe, more in general. I think for ASML and the consequences and so forth, of course that makes a bit of a difference, but it wouldn't necessarily be a shock in that respect, because we will still need ASML chips machines. Well,
Marieke Blom, thank you so much for your time. Greatly appreciated. That's the head of research and the chief economist at ING, the biggest bank within the Netherlands. The Netherlands, which obviously, though this has sort of been a very domestically driven economic and election campaign, sitting right at the center of that tech ecosystem being pulled between China and the United States.
Absolutely, Ollie. Thank you so much. That is Bloomberg's Oliver Cook there with his guest, Marieke Blom. Coming up, a look at what else is making headlines. We'll have your front page news next. This is Bloomberg. This is Bloomberg Brief, I'm Bonnie Quinn in New York. Time now for your front page news. First up, on the New York Times, Hurricane Melissa began churning through the southern part of the Bahamas last night after carving a path through the Caribbean. Officials said more than 20 people were killed in Haiti and 5 bodies have so far been recovered in Jamaica. The UN said more than 1 million people there were directly affected by the storm. Next, the Wall Street Journal leading with President Trump ordering the Pentagon to start testing nuclear weapons on an equal basis with Russia and China. The Journal says it's unclear whether Trump is referring to the testing of nuclear warheads or the missiles and other delivery systems. Trump later told reporters the impetus for this decision didn't relate to China nor his meetings with the Chinese premier. And finally, on the front page of the Washington Post, President Trump saying he has authorized South Korea to build a nuclear-powered submarine. That would allow the country access to military technology possessed by few other nations. South Korea's President Lee Jae-myung had asked President Trump to allow the country to acquire fuel for nuclear-powered subs. All right, we have a lot to digest in this market this morning, so let's take a look at where we stand. Macro-wise, futures were a little bit undecided. We are down on the S&P 500 and Nasdaq 100 futures, and you have to wonder if it's just this market deciding what to do. We have 4 hours, after all, until the open, because we have all those earnings to digest. Also, the Fed rate cut with 2 dissents. I did want to point to the 10-year yield rising substantially, the dollar index stronger, yen much weaker today. Coming up, we're going to talk about those central bank decisions. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Amazing summit. President Trump hails the meeting with President Xi that's resulted now in a détente and a pause on those rare earth export restrictions. Far from certain, Fed Chair Powell says a December cut is in no way a foregone conclusion. Yesterday's cut saw 2 dissents, opposition on both sides. And Amazon and Apple earnings on deck after the market closed today as investors digest results this morning from Alphabet, Meta and Microsoft. And to that effect, we are seeing futures lower, but fractionally lower, and we are 4 hours away from the trade open. And if you look at the Russell 2000, well, futures are higher. That's largely thanks to that rate cut yesterday, but it was a bit of an equivocal rate cut, right? There was a dissent on both sides from Schmidt and also from Myron. You also have Yardeni this morning saying that perhaps Powell didn't want to, add fuel to this stock market fire, perhaps to these animal spirits. At the same time, Powell putting an amber light on any December cut ideas, saying, look, we don't know yet. We're driving in the fog here. We don't have data, and let's just hold our horses for a minute. That didn't prevent the yield curve from steepening. We have the 10-year yield now back well above 4 at 406.60 and the 30-year yield well above 462. I just want to point to the yen as well because we're much weaker today by about 0.7%. We also had, of course, a BOJ decision. The BOJ stood pat, and we have Ueda saying, look, he's not going to hike just to give the stock market a boost. So 2 very different stories in either country. Let's get to some individual movers now with Kriti Gupta in London. Kriti.
Good morning, Bonnie. Tech earnings, of course, coming at us fast and furious. Let's start with a big winner here. Alphabet shares rallying this morning, 7.8% of a rally. This is a really big deal when you look at how Google is actually responding. There are 3 major players in the cloud business. It's Microsoft's Azure, Amazon's Web Services, and of course, Alphabet comes in third. The market really lauding the fact that they are not only gaining market share, but they're seeing better than expected growth in the cloud unit. So that's what's showing this pop in those shares. But it is not all good news for everybody. Meta is another one that we've got our eye on. It's about the same margin of a reaction, but to the downside. Remember, the CapEx story is something everyone is very sensitive to when it comes to the tech space. And we've seen this movie before with Meta when they've gone all in on a concept. The metaverse, of course, there are questions now when it comes to the analyst community about whether their big AI spend will actually yield results. Those shares down almost 8% on the day. I've got to stick with my Debbie Downer-ness, Vonnie. Let's talk with Chipotle. It is your biggest pre-market mover to the downside, down a whopping 17%. They are cutting their outlook for a 3rd time this year. Fascinating story. They're talking about the consumers feeling a pinch and that eating into their ability to actually turn more customers into their store. So those shares getting punished, down almost 19% as we speak, Vonnie.
And down 34% year to date, Kriti. Thank you so much, Kriti Gupta there. Opposition hardening at the Fed, with Myron and Schmidt dissenting on either side of yesterday's 25 basis point cut.
We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
Chair Powell also giving short shrift to the view that a December cut is a done deal, saying it's far from certain. Meantime, the yen is weakening after the BOJ stood pat. 2 dissents at that meeting too. Joining us now is Jane Foley, head of FX strategy at Rabobank, to talk about it all. First, the Fed, Jane, and thanks for joining. Is Powell's consensus declining? It's obviously a very thin consensus right now. Is he becoming less persuasive as a chair?
Well, thank you for having me. Well, that's very difficult to tell right now. I think it's fairly natural that there are going to be a different amount of views within a committee, particularly at a time when you have very little official data or no official data at all. So from that point of view, I think it's probably quite healthy that there is room for discussion. You can look back at the market and say, well, why was the market, so convinced that there would be a December interest rate cut, just a few days ago? Because, again, the market doesn't have the data either. So I think it was probably appropriate for there to be different views in the Fed, for them to discuss the different options, and then basically to say, we can't make up our minds at this point about December. We have to wait for the data. And I think that's what Fed Powell yesterday was reminding the market of. And I think that's a reasonable position.
Yeah, except you could say it's partially the Fed's fault that the market was so convinced, right, Jane? Because the Fed had been starting to get what seemed to me to be extremely worried about the labour market side of the mandate.
Yeah, that's right. And the market really had taken that cue. And perhaps this is why Powell felt that he needed to put the brake on that. Now, we did get some commentary yesterday from Powell on what he's thinking about the labour market. And that was important. That was one of the things that the market was watching for. And he did say, yes, there's a supply side factor here. There's a demand side factor. But, crucially, he did say that, whilst he saw and recognized that loosening in the labour market, he wasn't looking for an accelerating trend. So a moderate cyclical loosening in the labour market, nothing that he appears to be panicked about right now. But of course, like everybody else, he's waiting to see what the official data will say once it is released.
Yes, assuming it's released this side of the end of the year, we might get 3 jobs reports, all at once before the next Fed meeting. Powell did say we're 150 basis points closer to neutral now, wherever that may be. And that this might mean that there's a growing chorus of maybe we wait a cycle. So what if the Fed does start to look like it might cut in December? Does that then panic the market?
I don't think it will necessarily panic the market, because a lot of economists out there are already forecasting, that they will. But again, we do need clarity. But this is what the data is for, and this is what the data cuts through, some of that fog. And right now, of course, that fog is just staying around. It's a little bit heavier than normal. But, if we look through next year, there is still a lot of interest rate cuts in the price. So from that point of view, I think, one thing that would surprise the market is if, when the data is released, it shows a more resilient economy. I think that's something which perhaps would surprise the market even more.
At that point, Jane, would you begin to be more concerned about inflation? The Fed chair, again, sort of dismissing it as perhaps a one-time price shock, adding, between 0.2 and 0.6% to the official number, which would mean that we mightn't be as high at all as we are on inflation. But there could be a shock there in the waiting too, right?
They absolutely could. Technically, from economic theory, that's what tariffs do. They raise inflation. But the consensus right now appears to be, well, look, we haven't had an awful lot of inflation coming from tariffs. So what are firms going to do? Or perhaps rather than, price or their goods more expensively because consumers, for whatever reason, won't accept that, that's where the weakness in the labour market is expected to come from. Because instead of that, firms have thought, well, maybe we won't hire so much, maybe we'll lay some stuff off. So that's where the market is right now, wondering or worried that the labour market will take the brunt, perhaps, of those tariffs. But we need the data really to clarify the view either way.
Where does this all leave your view for the US dollar, given that DXY is above 99 now, and we have a yen after that decision and those comments in particular from Ueda that's close to 154, Jane?
well, with respect to the dollar, first of all, I should point out that it is almost the best performing G10 currency this month. I think the Swedish krona has just pipped it to the post there, but it's performing really well. And actually, the second half of this year, it's been really very stable. The weakness that we had was earlier on in the year, and that really hasn't intensified. And of course, that will be guided by Fed policy further down the line through to December. But with respect to the yen, that's another very interesting currency, because just as the market perhaps had expected Fed Powell to throw that door open to a Fed cut in December, the market perhaps had thought that in the Bank of Japan, they would throw the door open today for a hike in December, and we didn't get that. So from that point of view, the market has sold the yen today. It's a little bit worried. But again, that's another central bank that's data dependent. It's waiting for the wage data as well. And the other thing that we should say about the Bank of Japan is, the law, the Bank of Japan Act says, yes, the Bank of Japan is independent, but there needs to be good communication from the government and the central bank. Now, the Prime Minister has been in office for a very short period of time, and in the few days that she's been there, she's had to arrange a very important meeting with Trump. So perhaps there hasn't been time for that communication to take place yet. So I think with the Bank of Japan, could they hike in December still? Well, yes, they could if they get the right data.
All right, we cannot wait for some of this data to come out. Jane, thank you so much for joining. That is Jane Foley of Rabobank. Now to other top stories trending on the terminal this morning. Novo Nordisk has made a higher offer for obesity startup Metsera to consolidate its position in weight loss medications. Sources telling Bloomberg that Novo, which had earlier made a takeover proposal for Metsera before the US company reached a deal with Pfizer, has come back with another offer, an improved value and structure. Germany's economy stagnated in the third quarter, avoiding recession but falling far short of the surprisingly strong expansion recorded in France. Meanwhile, the French economy unexpectedly grew at the fastest pace since 2023, defying concerns that would have come from political turmoil. And 5 more people have been arrested in that Louvre heist case, the Paris prosecutor said yesterday, after 2 alleged members of the group that stole jewels from the museum were charged. Authorities linked one of the new individuals detained to DNA found at the museum. Coming up, President Trump and Xi finally meet. We'll discuss the details of the meeting and the deals made next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. A mixed bag in the latest big tech earnings. Shares of Meta and Microsoft falling in the pre-market after big AI spending sprees. Meanwhile, Alphabet rising after a surge in demand for its cloud services. Joining us now is Mandeep Singh of Bloomberg Intelligence. So Mandeep, very different reactions. Are we getting too concerned about spending? I mean, if they've got the ability to spend, let them spend, no?
Well, if you listen to Microsoft and Alphabet, they called out, being supply constrained at least through first half of 26. And that's why they're raising their capex. And the numbers actually look pretty solid. In Meta's case, even though they called out supply constraints, it's still unclear what the exact ROI is when it comes to all the investments that they are making. And all 3 players would be probably spending more than $100 billion in capex next year. So from that perspective, it's harder to see the imminent ROI with Meta. But with Alphabet and also with Microsoft, I mean, the cloud numbers show the ROI when it comes to all the AI capex. And I think it's justifiable. So the fact that Microsoft is down is just a function of valuation, and really, 39% growth for a $23 billion quarter in Azure, that's spectacular, and I think it's more of a digestion at this point of time.
Yeah, it's not bad. Zuckerberg also saying the 3 avenues for money making, because he was obviously asked about it, are advertising, commerce and subscriptions. Will all of that, plus I imagine some cost cutting due to labour efficiencies and so on, will all of that warrant all of this spending, do you think, Mandeep?
I think with Meta, you really have to wait for their model to catch up to the other frontier models. Like Gemini has caught up with OpenAI, and that's why you see, Alphabet doing so well. Even in the core search business, they grew 15%, whereas everyone was expecting core search to be disrupted. So model intelligence is what matters. And I think both Microsoft with OpenAI and Gemini have that model lead. In the case of Meta, you want that model intelligence to catch up first, and then it will show up in monetization, whether it's through, some sort of Meta AI adoption or Vibes, that's their new app. But it comes down to how good their model is versus the rest of the peers.
Yeah, Gemini with 650 million monthly users now, ChatGPT 800 million. Let's look forward to Apple and Amazon later in the day. I guess something a little bit different, right? What should we anticipate from those two, Mandeep?
Yeah, I don't think, none of them will really have a big surprise, simply because when I look at the cloud backlog, Microsoft Azure and Google Cloud are growing much faster. And so from that perspective, I think Amazon AWS will probably have inline quarter. And I don't see that acceleration in AWS that we saw with Google Cloud and with Azure. So that's one. And Apple, look, they had a nice quarter in iPhone unit shipment sales last quarter. But to my mind, there could be a pull forward element when it comes to Apple's iPhone unit sales. And yes, iPhone 17 has done well, but it'll be very hard for them to, grow into 2026 without a big tailwind from AI, because Apple has underinvested in AI, and they just need to find a way to, have an alliance with a large language model, whether it's from Gemini or Anthropic or OpenAI, to really drive those AI capabilities. In the end, that will be the biggest driver of, iPhone refreshes. And so to my mind, there'll probably be inline results for both Amazon and Apple.
All right, we'll be watching out. That is Mandeep Singh there of Bloomberg Intelligence. Now to our top story, Washington and Beijing easing tensions with a trade truce.
I thought it was an amazing meeting. He's a great leader of a very powerful, very strong country, China. And what can I say? We have, it was an outstanding group of decisions, I think, that was made. A lot of decisions were made, too. There wasn't too much left out there. And we've come to conclusion on many very important points.
President Trump now on his way back to Washington. For more, Bloomberg's chief Washington correspondent Tyler Kendall joined us now from Gyeongju, South Korea. So, Tyler, a lot of rhetoric praising this meeting, talking about on a scale from 0 to 10, the meeting was a 12. What were the deliverables?
Yeah, hey, Vani, good morning. It feels like the most tangible impact that we're getting from this meeting is that China will see an immediate reduction to its tariff rate. President Trump saying that he will cut that 20% tariff tied to fentanyl concerns in half, as he says that Chinese President Xi Jinping made some pledges to curb those so-called precursor chemicals that are used to make the drug. Just for context here, China exported about $1 billion worth of goods per day in September. Our analysts at Bloomberg Economics say that number is about to go way up with this tariff reduction. And now, of course, because the holiday season is upon us. So that kind of seems like the main deliverable that we're getting, because the other ones were widely expected, right? Both sides agreeing that China is going to delay its newly unveiled export curbs related to critical and rare earth minerals for at least a year, and that China has pledged to resume its imports of U.S. agricultural products, including soybeans, though we are still waiting for those exact details on just how much and how quickly American farmers are going to see relief. On the U.S. side also, the U.S. is no longer going to impose fees on Chinese ships that are docked at U.S. ports. So a lot of what we're seeing is really just a pullback in the recent escalation of the past few weeks. But Vani, two things for your radar that we did glimpse a little bit into, though perhaps not quite the outcome that we were maybe tracking. One, President Trump saying that he did not discuss NVIDIA's Blackwell chips with the Chinese president, though they did discuss other NVIDIA products, and he said that that conversation is going to be ongoing. And two, the pair of leaders also discussed the war in Ukraine, but it does not appear that China is making any moves, Vani, to curb its imports of Russian energy supplies.
Yeah, Tyler, lots to discuss. And there is an invitation out now to the Chinese president to visit the White House, and President Trump said he would be visiting China. There was some de-escalation apparently elsewhere as well. Trump having a talk while he was there with Mark Carney of Canada.
Right, exactly. And this comes after we heard from President Trump on his way over to Asia say that he was not interested in speaking with the Canadian Prime Minister. Now, at this point, we haven't gotten a readout of that conversation, but we know that Canada has been trying to get these trade talks with the U.S. back on track after President Trump had essentially pulled them off the table and threatened now this additional 10% levy on Canadian goods. As you well know, Canada is already facing a 35% levy for non-USMCA compliant goods, and then really high levies when it comes to those sector-specific tariffs, like 50% on steel and aluminum. This is something that we're watching very closely, of course, as the escalation continues. And then, Vonnie, compare that with our other North American neighbors, Mexico, earlier this week, actually getting an extension on their trade talks so that they can continue these negotiations. So it's very interesting to compare how the two leaders have been talking to President Trump, but clearly a positive indication that President Trump did say that he had this conversation with the Canadian Prime Minister while here in Asia.
Tyler, thank you so much on that Asian tour all week. That is Tyler Kendall. Back to earnings then. We are also awaiting consumer results from the likes of Hershey, Estée Lauder and also Kimberly-Clark. They're all before the bell. This as the Kraft Heinz CEO warns of the worst consumer sentiment in decades as the company lowered its sales outlook. For more, joining us now is Bloomberg's Maddie Parker. Let's begin with Hershey and also Estée Lauder, I guess. Maddie, what are we expecting in terms of their comments about the consumer?
Yes, obviously at Estée Lauder, I think all eyes kind of are still on their turnaround efforts. They brought in a new CEO at the start of the year, and big changes have already been made at the brand. We're talking job cuts, but also some shifting priorities in terms of what they're focusing on. They've really got some strong focus on some of their most successful products in skincare and cosmetics, and it'll be interesting to see how consumers react to their decision to actually lower some of their prices and to try and keep up with some of that really fierce competition from some of the smaller labels. It's sort of a similar picture at Hershey in terms of who's calling the shots. They brought in a new CEO earlier this year, and this will be the first set of results under him. Hershey, along with a lot of the other confectionery makers, of course, have faced a lot of rising ingredient costs over the past couple of years, particularly in the form of surging cocoa prices. So what will be interesting there is to see how consumers are responding to their decision to actually hike their prices and to try and kind of make up some of those headwinds, and to see how consumers are kind of reacting, particularly as we approach Halloween and the festive period, which are obviously when some of the chocolate makers get bolstered performances.
Yes, and apparently shipments were a little early this Halloween. Maddie, we have to leave it there, but we'll be watching for Hershey and also Estée Lauder and Kimberly-Clark as well, which has been doing a bit of a strategic tidying up. That is Maddie Parker. Thanks for joining. Coming up, we'll get you set up for your trading day with more earnings and that rate decision by the ECB. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Now a look at what's ahead today. Earnings continue. We have Eli Lilly, Hershey, Estée Lauder all reporting before the bell. Then the European Central Bank announces its rate decision at 9:15 Eastern, followed obviously by President Lagarde's press conference at 9:45. And Apple and Amazon report after the market close. In terms of micro movers, Alphabet sales beat estimates, as we know, on Google Cloud unit growth, so we're seeing those shares continue to rise. They rose obviously after market yesterday too. Now investors have been a little bit spooked by Meta's spending. It warned of even bigger spending to support the AI boom, and that's sending those shares lower along with a one-time charge. And Chipotle down 18%. Weaker traffic at Chipotle, and that's weighing on the outlook. I want to point out that Novo Nordisk has now outlined its new offer for Metsera. It'll be $56.50 a share cash, plus more than $26 a share CVR for Metsera. That is it for Bloomberg Brief.